Good afternoon, everybody. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services. And Graham, it looks like we had a pretty exciting week last week. Can you tell us about what happened in the market?
Well, you're right. We did have an exciting week. I think we're in on about a 4-week stretch here for the S&P, if not the U.S. and the markets in general. They're up about 50% from their June lows, and 90% of stocks in the S&P are above their 50-day moving average. So what do you take away from that? A lot of confidence, right? I think we really saw the consumer price index hopefully top out and come down from 9.1%. That's the inflation rate, from 9.1 to about 8.5. And last week, maybe got a little confirmation of that with the producer price index, the PPI, actually going down for the first time in 2 years. So we had the Russell index up about 5%. We saw the NASDAQ and the S&P up about 3% last week. We actually saw a bounce in crude oil, off some lower levels previously. Energy was very strong. Financial was strong. Material, consumer discretionary strong. We saw generally good earnings. If we think about internationally, though, we're seeing a different story. A different story over in China. You're seeing China really trying to grapple with a real estate crisis. And we may see, if they haven't made the call already, that they might lower interest rates. Where we're raising interest rates to combat high inflation, they might lower interest rates to spur on growth because of the real estate crisis that they're having over there. I think developed Europe, internationally, they're still having challenges, with growth, inflation, tied with the energy trade.
Well, looking at the performance of the market and the lower inflation numbers, is this kind of the all clear that things are getting back to normal?
I don't know if it's an all clear, right? I mean, they rarely wave a flag, in those terms. But, I think things are better, right? I think we're seeing that commodities are rolling over, gas is coming down. Everything that we talked about is starting to roll over. It's showing up in the CPI number. Maybe the Fed doesn't have to be aggressive. They don't have to be aggressive. Maybe we don't need to be overly concerned about a deep, protracted recession. Maybe it is more like we feel, maybe a light one. And I think that's lifting positive attitudes towards investing in the market. And I think rightfully so in this market.
Well, with that being said, and with the rally that you just told us about, is now a good time to invest in the market?
Well, Stacy, we often joke about it's always a good time to invest in the market. Think about dollar cost averaging, right? There's some areas that have rallied a lot, but they're still down a lot. A lot of high quality companies, not to mention even the fixed income market. There's some great opportunities. So I wouldn't let the short-term rallies dictate if you're going to continue to make long-term investments. Always make the long-term investments, even though we might get some short-term digestion, meaning the market might pull back a little bit just because it rallied a good bit. But I don't think that should hold you back. I think you need to kind of step forward in that environment.
Good advice. Thanks so much, Graham. And thank you to our viewers for joining us today. We hope you have a great week, and we will look forward to seeing you again next week for the weekly wrap-up. Thanks so much.
Take care.